What's up, value hunters? Dave here, and today we're diving deep into Molina Healthcare, ticker MOH. This stock has taken an absolute beating, down over 60% from its highs, and it's got some big names like Michael Burry taking a peek. But the real question is, has MOH finally found its bottom, or is there more pain ahead? Let's find out. All right, let's set the stage. The market narrative for Molina Healthcare is pretty clear. It's a story of significant headwinds. We're seeing persistent medical cost inflation hitting them hard, especially in their marketplace business. This led to a pretty dramatic slash in their 2025 earnings guidance, going from an initial $24.50 all the way down to a projected $14 per share. Ouch! Despite all this operational pain and that huge stock price decline, there's a contrarian twist. The legendary Michael Burry has actually invested in MOH. So we've got a tug-of-war between fundamental challenges and a famous value investor's bet. The big question is, who's right? For those unfamiliar, Molina Healthcare Inc. is a managed healthcare giant, primarily serving low-income families and individuals through government-sponsored programs like Medicaid and Medicare, plus the state insurance marketplaces. They're a big player, serving about 5.2 million members across 18 states. Now, remember that earnings guidance I mentioned? They started 2025 expecting $24.50 per share. Then it dropped to $19, and now they're saying $14. That's a huge shift, and it tells you everything you need to know about the challenges they're facing with those rising medical costs outpacing state reimbursement rates. So, how do we reconcile a company slashing guidance with a famous investor buying in? Well, we crunch the numbers with our scenario analysis. First, the market's definitely priced in a lot of that negative news. But Burry's bet suggests he sees long-term value beyond the immediate pain. Let's break down our three scenarios. First up, the base case. Here, we're assuming Molina largely meets that revised 2025 EPS guidance of $14. The market has kind of digested the medical cost inflation news, and we're betting management's efforts to renegotiate skate rates and improve efficiency will give them some stability. The core Medicaid business should hold up reasonably well, despite costs creeping up faster than rate increases. We assigned this a reasonable forward PE of 8.0x, giving us a fair value of $112. We're giving this base case a 40% probability, mainly because, while things are tough, the stock is currently testing its first support at $135, which could provide a temporary floor, but it's not a strong reversal signal. Next, we have the bull case. This is where Molina really shines and beats expectations. Maybe medical cost inflation cools off faster, or they get much better state reimbursement rates, or their marketplace segment turns around dramatically. Michael Burry's move points to this long-term potential. In this scenario, we're projecting an optimistic EPS of $16 and applying a higher PE of 10.0x, bringing our fair value to $160. We're only giving this bull case a 15% probability. Why so low? Because for the stock to truly enter an uptrend, our technicals tell us it needs to maintain above $205, which is significantly above current prices. That's a big hurdle, meaning a fundamental positive catalyst would need to be huge. And finally, the bear case. This is where medical cost inflation just keeps getting worse, impacting Medicaid more, or the marketplace segment's losses grow beyond projections. Management could miss their already reduced 2025 guidance. We're looking at a conservative EPS of $11 and a lower PE of 7.0x due to increased risk, giving us a fair value of $77. We're giving this bear case the highest probability at 45%, and here's why. The technical analysis strongly supports this pessimistic outlook. The stock is in a clear downtrend, gapping down and forming a bear flag. If that 135 support level fails, we're looking at significant downside risks towards $110 and even $95. The market's lost confidence and the charts are screaming caution. All right, let's pull up the chart. Here's what I'm seeing based on our technical analysis. MOH has been in a definitive downtrend and it's gapped down significantly. Currently, it looks like it's forming a bear flag pattern, which typically signals a continuation of the downtrend. Looking at key levels, we have support at $135, then $110, and if things get really ugly, $95. For this stock to even think about resuming an uptrend, it needs to decisively maintain above $205. That's a long way up from where we are, indicating a pretty steep climb for the bulls. So, is the bottom in for Molina Healthcare? Based on our analysis and with a heavy lean on those technicals and persistent cost pressures, my verdict is not yet. The bear case has the highest probability at 45%, driven by the potential for continued medical cost inflation and those overwhelmingly bearish technical indicators like the downtrend and bear flag. While Michael Burry's bet is intriguing, he might be a bit early on this one. The path of least resistance right now still looks to be down. For those looking to potentially get in, given our scenario fair values and the technical supports, I'd be looking for potential levels of interest around the $110 and $95 technical support zones. Our bear case fair value is 77, so keep that in mind as a potential floor if things really get rough. Remember, these are just potential entry points, not guarantees. All right, value hunters, that's our deep dive into MOH. If you found this analysis helpful, smash that like button, subscribe for more episodes, and drop a comment below. What do you think about Molina Healthcare? Are you with Burry, or do you see more downside? Let me know. This video is for informational and educational purposes only and is not financial advice. Investing involves risks, and you could lose money. Always do your own research and consult with a qualified financial professional before making any investment decisions. I am not a financial advisor.